Owning a home has traditionally been considered part of the American dream. But houses are expensive, and that usually means debt. Housing debt in the U.S. surpassed $10 trillion in the second quarter of 2020. So how bad is it if you skip the mortgage entirely and decide to keep renting? The short answer? You're definitely not doomed to financial failure. But depending on your circumstances, you may miss out on an attractive investment opportunity. Let's consider the financial pros and cons of renting versus owning. If you have a fixed-rate mortgage, your monthly payments will be fairly predictable. You'll pay the sales price for your house plus mortgage interest. Rent payments could go up over time, and since you might be renting for a long time, you could be making payments long after you'd be free and clear of a mortgage. On the other hand, when you own a home, you have to pay to fix anything that breaks. One rule of thumb is to assume 1% of the purchase price per year for maintenance. Additionally, you have to pay property taxes, which can be very high in certain areas. If you rent, your landlord typically covers those costs. To complicate things further, if you own a home, there's no guarantee you'll be able to sell it for the same price at which you bought it. Although home prices tend to rise over time, you could lose out if you have to sell in a bad market, as many Americans were forced to do during the 2008 financial crisis. On the other hand, if you're renting and you need to move, it's generally just a matter of finding a new place and signing a new lease. You may pay less per month on rent than on a mortgage, especially after factoring in taxes and insurance. If you set aside those savings and invest them, you're likely to end up with at least the same amount of equity as you would with a paid-off mortgage.